Hey guys, welcome to my very first podcast. With this podcast, my aim is to bring genuine set of traders in front of you and try to understand their trading approach as a curious learner. So I want to dig deep into their trading approach, understand the advantages, disadvantages, how do they counter the disadvantages. Overall, in a broader sense, you can say I want to understand the good, bad and the ugly aspect of each trader's approach. The first guest whom we have on the show is none other than my very close friend Praful. So Praful, as you all know, is a very aggressive expiry day trader. So he mostly trades 0DTE and we will have a lot of things to learn from him. So not just aggressive, he is also one of the traders who has delivered consistent returns over an extended period of time. So he generally aims to do somewhere around 3 to 5% per month and he has a consistent track record of delivering over 50% for the last 3 years. So let us try to understand how he approaches 0DTE, what is his mindset, what has changed over time because of the recent spikes coming in, and overall let's try to understand his entire approach in a nutshell. So before moving on, I would just like to talk about the sponsor who has helped us bring this video to you, and the sponsor for this video is Firstock. Firstock, as you know, is a broker which we have been using from almost 3 years. Now, within the next quarter, they will be coming out with their new platform, which is extremely advanced. So to get early access to the new trading platform, not just that, to get also early access to all the offers they will be bringing in the future, make sure you open an account using the link in the description below and get 2000 rupees worth brokerage credits absolutely free. With this, let's quickly move on to the video and try to understand the trading mindset of Praful Kulkarni. So if you have found the content on this channel informative, make sure you hit the like button right away, share this video and subscribe to my channel so that I get you more content this way. Thank you so much. Hey Praful, thank you so much for coming to my podcast. And so just to give a quick introduction to all the viewers, so you don't need an introduction actually because you're already pretty well known in the trading community. So Praful has been trading since almost around 3 to 4 years.
5 years.
Well, almost around 5 years, and to be honest, he is one of the most successful traders out there. So in the trading community, easily generating over 50% CAGR, which will literally look like a piece of cake for him. So today in this podcast, we will try to understand his mindset and how can a trader today become like Praful Kulkarni. So we will try to understand how he approaches trading, what are the flaws in his trading, and how exactly he has changed his trading style over time. So welcome Praful to the podcast.
Thanks man, happy to be here. And I think this is the first episode in your podcast series. So I wish that this series make new highs.
Thank you so much. So we can start off the conversation, Praful. I want to keep it little raw, and also we can get into some serious aspects later on, and we'll try to keep the podcast as light as possible. Right? So what I would want to know is, just for the viewers, you can start off by introducing yourself, your trading style, and how you got into trading.
So Saket, I think I've told about my journey on multiple platforms. I got introduced to the markets from one of my colleagues when I was working in a central PSU. And after that, of course, I started experimenting with multiple different things because market is a big, a big stadium where, you can play whatever you want. So you have to fixate on what kind of game that you want to play. So there are people who trade futures, there are people who trade directionally, there are people who trade in equities, there are people who trade leaps. So there are multiple different styles of trading. So you need to understand, okay, in this particular game, what is my role and what suits my risk profile, what suits my return expectation, what suits my temperament, and what kind of overlaps with my strength. So this is kind of, you have to get your hands dirty. Doesn't matter where you start. You have to dabble into different instruments, you have to dabble into different trading methods, you have to dabble into different time frames, and you have to see what fits you. So I did the exact same thing. So the first 6 months I tried across different instruments. I tried long options, I tried short options, I tried futures, I tried intraday equity trading and all that. And finally, I fixated on positional option selling through non-directional structures, and it went well. And I think call it good luck or call it perfect timing. It was 2020 post the COVID crash, and the IVs were massive, like the IVs had skyrocketed. So basically आप कुछ भी आंख बंद करके बेचो और सुबह कहीं पे भी मार्केट खुलने दो,
you would make
my MTM would always open in green. But then 2021 the IV started cooling down, the VIX started coming down, and then the market still started showing gaps thanks to Fed Powell. तो Powell साहब का मतलब कुछ भी बोल देते तो वहाँ से impact आ जाता था, and the markets used to gap up and gap down, but with not much premiums to handle those kinds of gaps. So then I started trying to replicate the exact same thing on an intraday basis. And then 2022 Fin Nifty expiry got introduced, so now I got, instead of one expiry, I started trading like multiple expiry, and then last year like almost 3-4 expiries were there, and by the start of this year like we have almost everyday expiries. But I used to be the biggest cheerperson for everyday expiry. But over the last few months, over whatever that has transpired over the last few months, I think I'm not as keen as I was before to trading expiries. We're going to talk about this later in the episode. But right now, I've been trading different stuff. I've been trading expiries a little bit with around 20-30% of my allocation with a lot of tighter spreads. And then I'm also trading like other DTs, 1 DTs, 2 DTs, and also like I have some exposure to my positional trades as well.
Right. So actually, this is my second question. Mostly was around this line itself, because like when I came into trading around 2017, if you ask me, almost every single year I have changed my trading style, because one style of trading doesn't fit for all the years.
100%.
Right? So with all these recent spikes going on and all of that, right? So I'm pretty sure even you would have made some changes to your trading style with the everyday expiry coming in and the spikes coming in, right? So just to give a quick journey, I know that you're a non-directional or mostly a mean reverting trader, right? So maybe if you say from 2021 till 2024, so how has your trading journey evolved? Like, so where did you start off and now where are you at?
Okay, so in 2021, the opportunities were less. There was only one expiry, and it was Nifty and Bank Nifty expiry, and both expired on the same day. So basically, you had like one expiry day. Apart from that, the remaining 4 days, you had the wall risk, the Vega risk, right? Like if, let's say, the markets moved a little violently, you had no other option but to take losses on those days. Unlike expiry. Expiry mein kya hota hai? Like even if the markets moved, since the OTMs would definitely go to zero, like you can, some sort of salvaging can be done on expiry days, but on the non-expiry days you had to cut it at the stipulated point. And at that point I had no other option but to go heavy right from the first tick, and wahan pe the walls were also good, like the IBs were good, the premiums were good, and it was not concentrated risk nahi tha. But as more and more people got aware about the zero DT trading, like even I started putting out all my live trades, and other people also started putting out all their live trades, and people understood that, okay, money could be made in this fashion, by trading in this fashion. So the premium started going down. So the VRP, we get like 2 wall points of risk premium, right? For example, if market is trading at 12 wall and the realized volatility is 10 wall, the 2 wall point difference is what you make when you trade from a non-directional front. That started to kind of dissipate. Basically, even now there is some edge with VRP, but that edge is being consumed by the delta costs.
Got it.
Let's say, to put it in a very rudimentary way, let's say पहले straddle 150 points पे अगर expiry day पे Nifty का straddle open होता था, the markets used to move 100 points up, 100 points down, and then it used to close somewhere around this thing. But now, let's say the markets open with a straddle premium of 100 rupees, the market moves 250 points up, 250 points down, and in between some minor swings. So if you're a delta neutral trader, you cannot be just sitting in hope. Like you have to manage your deltas, you have to adjust for your deltas. तो जब आप adjust करते हैं and जब वो immediately mean revert हो जाता है या किसी दिन एक direction में drift हो जाता है, that whatever the theta that you want to capture, so that gets consumed by all your adjustment costs. And also, apart from that, now we are seeing a lot of these spikes. Matlab, it's more of a concentration risk, not actually the strategy risk or something, because like everybody is doing predominantly the same kind of things. And especially when the premiums are low, in the low VIX regimes, the entire market would be sitting on 1 or 2 strikes.
Right.
And when the SLs get triggered, that creates some sort of a
Domino
cascade,
effect,
domino
right.
effect ho jata hai. And we have seen this not only on amateur indices like mid-cap Nifty and Sensex,
Even
but also
Nifty.
one of the stable indexes like Nifty. I know a lot of people who lost 10, 12, 15%, even 20% on that Nifty day.
I lost almost around 5% on the same day.
Yeah, so that has been the case. Now the expiry trading, which used to be like, हाँ भाई हर सुबह आ जाओ, straddle या strangle ठोको and adjust करो थोड़ा बहुत पैसे बन जाएगा, that is not the case anymore. New sorts of risks which were there before, but now they started to materialize.
Right.
मतलब पहले भी मतलब हमको पता था कि हाँ एक black swan event आता है या like if Nifty starts cascading on an intraday basis, these were the risks, but those risks were never that apparent. But over the last couple of months, these risks started materializing more than one would imagine. So now the approach has changed. The approach has changed in the sense core philosophy trading ko same hi rahega, because like you're a trader, especially if you're a discretionary trader, it's very hard for you to suddenly go from a short, go from short options to long options. ये वो होता नहीं है. Your philosophy remains the change, but a little bit of tweaks here and there you can make depending upon how much exposure you're willing to take, depending upon the sizing and depending upon your entries and depending upon how you manage the risk to the best of your possibilities. Because लोग risk management को लेके बहुत बड़े-बड़े बातें करते हैं, but think about this. A risk is something which is not seen by you.
Right.
If you can see that risk, then it's not actually the risk because you can manage it. The risks are usually those things which are not comprehended.
Right.
Huh? So all we do is like, we do the things in the most logical and rational way possible, try to manage the risk to the best of our abilities, and we have our worst case scenario fixed.
Right.
That is the important thing. And we have to truly accept that worst case scenario. If let's say like your war is 15%, you have to accept that, bro, the day when this kind of a thing happens, which has a very minute probability attached to it, even then, if that happens, I'm okay with it.
Understood. So this actually is quite true, at least considering the recent events.
Yeah.
So before we actually get to the recent events, what I would want to ask is, so let's slowly start to get to, let's say, the flash crashes, what we have seen of 1%, 2%. But assuming that today I put Praful in front of the trading screen at 9:15, right? So what would be the first thing he would see, and how would he start building the positions based on that?
Again, it depends, okay, because like I'll have to look at the IVs of different dated options. For example, one thing I've decided is not to touch amateur indices like mid-cap. And even if I do, I'd rather go for spreads, tightly hedged spreads, so that like my war is capped to 4 or 5%. So even if mid-cap Nifty like falls 5-10% in the next 10-15 seconds, I'd not lose more than 4-5%. And it's completely okay for me to lose that, because like I try to generate somewhere around 8-10% month on month basis, because I take leverage. And leverage is a double-edged sword. People say that, oh, you are highly levered and all that. Yeah. When I know that I can manage the risk to the best of my abilities and I've accepted the worst case scenario, then everybody is at a different point in their life to take a decision about their risk profile, right? So I say that I position myself or my exposure in such a way that the max war is the value at risk is somewhere around 4 or 5% of the capital. If somebody wants to go even aggressive, like they can take 10%. If somebody wants to go a little conservative, they can take 2%. So depending upon that, but your war has to be capped.
So now, when you generally, let's say, you start trading around 9:15. So what I would want to understand is, so do you approach it in a directional way, or let's say after a move you want to basically try to do a mean reverting thing?
Yes.
Or do you always go with non-direction and then try to manage your risk?
Now, generally, like some recent changes that I have brought into my trading thing is I have tried to go a little bit directional. Okay. First, I'll open with a directional trade, and depending upon how that trade performs, I'll try to strangle it and make it non-directional if my trade doesn't work out. And if market shows the signs of trend, I'll start to pyramid my position.
Got it.
For example, last week itself, like we had like 2 or 3 like very good trending days.
Right.
So I didn't try to be fully non-directional on those days, but I tried to pyramid my position. But one thing I've noticed that you cannot be pyramiding aggressively on intraday, because intraday mein the pullbacks are very hard, and especially when you're trading non-directionally, when you're trading on 0 DTs with a considerable leverage like 6x 7x leverage se trade kar raha hai, then these pullbacks are going to hurt on your entire position. I mean, hurt in the sense like your variance is too high, your mark to market variance is too high. So if you don't want to take that variance, of course, like you'll have to slowly start from the other side, like mean reversion positions bhi lena padta hai. So basically how I approach is like, first I open a directional trade depending upon some basic price action points, and then depending upon how it works out and where my mark to market is, I start to add on either a non-directional trade or a pyramiding of the same directional position.
So now, Praful, like I think over the years, let's say even for me, let's say today if we sit in front of the screen, so we get an inherent feeling of the trend. We might be wrong, but just sitting in front of the screen, you get that feeling, okay, today the markets can maybe try to go upside or downside. Let's say a beginner is going to start now, or let's say you want to go 5 years back and tell yourself, right? So how would you, let's say for a beginner, how would he maybe judge the trend? Like, is it basically just simple support resistance, and how will he start taking his first position?
Okay, it's a very good question, okay? Because first let me address what you call the experienced traders. After experience, you'll get that intuition and all that. I'd say that my intuition is only 50% right.
Okay? Everybody's.
Okay? It's just that you have that comfort of your contingency plan, which makes you take these random intuition based trades. For example, जब market open होता है and I say that market नीचे आने वाला है and I sell my calls, ठीक है? It's not, the confidence doesn't come from the fact that, oh, my intuition is going to go right, but the confidence comes from the fact that even if it goes wrong, I have certain ways and means to manage my position.
Right.
Correct. So the confidence is not basically from whether your trade is going to work out or like how much you're going to make, but what are you going to do when it turns out wrong, goes wrong. So for a beginner, instead of going based on their hunches, they have to have some sort of framework in place. It's like a simple set of if and else rules. If this happens, I'll do this. After that, if this happens, I'll do this. It's like a proper, like a flow chart.
Right.
Okay, market opens here. They know that after the pre-market, they understand that where the market's going to open. Let's say like there's a gap down. So they understand that, okay, we have been like gapping down for a long time, and now the market's tendency is to fill that gap. So for the first 1 hour, like I'll sell my puts, like ODM puts, yeah, ATM puts, like whatever, put spreads, or I'll do some call ratios. And once it comes here, and then I'll wait for the price action to develop there, and then I'll take my next decision. Because you cannot, people say that, oh, my entire day's plan is figured out. No, because a trend can also develop in multiple different ways. Correct? There will be like days where the trend is completely smooth, linear, and then there will be trend which is little choppy and gives like a lot of pullbacks, and then there will be trend which retraces all the way back to days high and then goes down. So you cannot be having like the plan for all the things, but one thing that you can use as a homing beacon is your own mark to market. Right? Like if your mark to market is in green, or it's stable, or it's ever increasing, it means that like you're in good sync with the markets.
Right.
And if your mark to market is constantly going down, it means that something is not working. Either your intuition is not working, or market is like behaving in a way which is completely against your trading methodology. Right. So if you're going in red, it is better to, reduce your position size. Let me explain it in the, cricketing terms. You go on a pitch, okay, like this is the first over, and you don't know how the pitch is going to behave, right? Unless you're Sehwag, you're not going to try to hit the very first ball to a boundary. Now, first ball, you just leave the ball, like have a few dot balls, understand like how the bounce is, like how the swing is, how the bowler is. And at the same time, this is about like outlook, market outlook, all, whatever the swing, the bounce and all that, this is market outlook. Then you have to look inwards also, like how well I'm in sync with the markets. Right? Like let's say like the ball is coming good to the bat, but you're not able to time it well. You're not able to find the gaps. You're edging the ball, like you're missing the ball, you're not timing it well. Then it means that, okay, the market might be like not as bad as, one thinks, but I'm not in sync with the markets.
Right. So this actually also answers my next question. So like one thing which I also wanted to ask you is on what basis you would slowly start building up your position. I think you have already answered that quite.
Yeah, it's pretty much based on like I visualize my trading day like building a cricket innings. Okay, so the goal is to hit a century, but you not hit a century every single day. Okay, there are days where you get out on the first ball itself. But I try to build my positions in a way, in a slow, gradual manner, depending upon a lot of inputs. Generally, like I talk about this a lot. A discretionary trader has inputs from 3 different points. One is the market's basic price action, the market's moves. Second is his MTM, like how his MTM is. And the third is his own intuition, his gut feeling, and his level of sync with the markets. So our decisions are based on the synchronous effect of all these 3 inputs.
Very
So based on these things, like I try to build my positions.
So Praful, now like after the recent spike, so we know that okay, you had gone through a drawdown with Sensex and mid cap, right? And then now we have also come out of the drawdown, right? So before this, I think maybe these things, so like the flash crash, what we have seen of 1.5-2% and markets recovering, might have maybe brought in some fear for you to change the trading approach. So I don't know if that is true or not. We'll find that out later.
Absolutely. Because see, I always say that like you should always have some sort of a healthy fear towards the markets. The moment you lose that fear, you're counting your last days. Right. So there is an adage, right? Like there's an old saying that which says that there are old traders and there are bold traders, but there are no old bold traders. If you want to do this for a long term, like we should always have that healthy fear towards the markets. And the first thing that a trader needs to ensure is to stay in the markets for as long as possible.
Right.
It's like as a batsman, your first goal is to not to score runs. It is to protect your wicket.
Right.
So that depends on person to person. Let's say like I'm trading with only 20% of my net worth or 30% of my net worth, and I'm okay to take like 20% risk on my account. Okay, on a black swan event, I am willing to lose that 20%. I don't care. That's completely okay. There are people who I know who are trading, like who are running automated systems and who have a stable income apart from trading from their job or from their business. And they have invested only 20-30% of their net worth in trading, 10-20-30% of their net worth, and they're okay to lose 20% or 25%. 20 of 20%. Yeah, that's completely okay. But the problem with a lot of people like who come into markets is they forget about like 100% of their net worth. They even bring loan and they start trading. So that is not the right way to do.
Right. So actually, we also started with taking outside money, but luckily for us, things went well. Like again.
Exactly, it is the classic case of survivorship bias.
Right.
Correct. Even like we all hail like big ace investors like Rakesh Jhunjhunwala and all that. They at the end of his career, he starts saying that if you get 12%, you're king. If you get 15%, you're an emperor. But in his early days, like he used insane amount of leverage. Insane amount of leverage. It's almost like Karodpati or Rodpati kind of a scene for him. So, almost everyone is an example of survivorship bias. But at the same time, you need to be okay with the worst case scenario.
Right.
You need to have that 100% acceptance for your worst case scenario. And if you're okay with your worst case scenario, there is nothing right or wrong, man.
Right.
There is nothing right or wrong, because I know people like who trade. Because I used to be of the opinion that, if you take naked positions overnight, you're committing a sin. Then I started understanding that, okay, naked positions overnight या intraday, दोनों में अभी ज़्यादा फर्क नहीं है. This is like my recent epiphany. है ना? तो then I started understanding, okay, सबका अपना अपना risk है, अपना अपना risk profile है. You need to understand that because your trading account is not your entire net worth, right? Like you use a certain percentage of your net worth to trade, and उसके ऊपर आप कितना risk लोगे, that depends.
So maybe previous to the recent events, has it ever come to your mind, okay, maybe if there's a 5% flash crash, so Praful can wipe out more than 20% of it, or let's say 30-40% of his capital, or were you always in a case that you had hedged in a way where your max VAR was at 20%?
I always try to keep my max VAR at 20%. Now, as the day progresses, I try to bring it even lower. Okay. Either through my position sizing and with the hedges. See, because intraday, even if you're trading naked, if the circuit hits, you'll lose like 40% even with a 1x, 2x or 3x exposure. 3x exposure is simple as this. Okay, like you're taking 3x leverage, 3x, you're trading the 3x the notional.
Understood.
So if market falls 10%, you would lose 30%. But let's say your hedges are there, instead of 30%, you would lose only 10%. So my VAR continuously changes throughout the day depending upon a lot of things. And I try to hedge tightly on the put side. but I'm okay to take a certain amount of risk on the call side.
Right. So that means, okay, now, like after the recent scenario, like pretty sure that you have changed your approach also, because I think you have mentioned in Twitter also,
Yeah.
you have started adding hedge,
Yeah.
right? So because of which you also got saved in Nifty. Right?
Yes.
Right. So are you also exploring positional? If yes, so let's say, how are you managing both at the same time? One question. And second one would be with respect to including both positional and intraday. So what would be your max value at risk?
As I mentioned before, I used to do positional in 2020 and 2021, so it's not a new thing for me. It's just that like I had gotten comfortable without carrying any overnight
Right.
positions and without worrying about where the market's gonna open and all that. But now I have evolved as a trader. Now I understand risk better, so I can handle positional in a much better way. So when I take a positional trade, my max VAR would be capped at 5%. Because intraday mein, like you have SLs which have a certain probability of hitting, and you have certain mechanisms which instead of like let's say like intraday में 2% लॉस लेने की जगह किसी दिन 3 या 4% ले सकता है, and that's completely okay when your return average returns are like 5, 6, 7% per month. But positional पे ऐसा नहीं होता. Sometimes you won't get a chance to exit also. So there my VAR is even tightly capped, 5%.
Okay.
So when you're trading with such minimum VAR, you don't have to worry too much.
Right.
5% VAR पे क्या ही होगा?
True.
Even if the market hits the circuit, it's going to be. And you asked about like how do you manage like both positional and intraday. The better way is to have two separate accounts or two separate books so that you don't get confused and you don't have any manual errors while executing the orders. मतलब कोई 0 DT या 1 DT ट्रेड्स कर रहे हो एंड उसके बीच में कुछ पोजीशन काटने की जगह आप पोजिशनल ट्रेड काट सकते हो. एंड बिकॉज पोजिशनल में ना यू कैन नॉट बी लाइक हैविंग लाइक टू मेनी इन्स एंड आउट्स. लिक्विडिटी ज़्यादा नहीं रहता है. द बिड आस्क स्प्रेड विल बी वेरी वाइड. द इम्पैक्ट कॉस्ट इज वेरी हाई. सो आई सजेस्ट लाइक कीप अ सर्टन अमाउंट ऑफ योर कैप on in a different account and trade that positional stuff. And at the same time, positional doesn't require too much of the management. Especially if you go for like bi-weeklies, bi-monthlies and monthlies, it hardly requires any adjustment. There are like there are days, there are weeks without making any single adjustment, right? So when you're too accustomed to trading a 2020, I mean trading expiry day, which is kind of analogous to 2020, test match तो आराम से खेल सकते हैं.
So this actually why I asked this question is because okay, again like since I have also changed my approach, so now like even you might know Ayush also. So Ayush is other colleague of mine who trade with me, right? So what we do is so now we have more or less done in a way where you manage certain indices, I will manage certain indices, we will not overlap. So you won't have Bank Nifty and I won't have Bank Nifty positions at the same time. So there is no question of like me maybe messing up with his trade. So that's why I just came across with this question. So my next thing would be Praful. So I believe like let's say in the market, so the risk that the particular option has is mostly defined by three things. So one is how closer you are to the ATM. Second one, what is the time to expiry, and third one is the price itself. Right, so the higher the price, more the delta risk, and lower the price. So now, so let's say you're now trading 0 DT. Let's forget about VAR, right? So what are the factors that you would use to maybe assess the risk a particular option? So do you are you heavily dependent on the Greeks as per se, or would you basically try to trade based on price itself?
Though I have, how would I put it? I don't use Greeks at least for intraday trading.
Okay.
Intraday trading में तो Greeks का I don't see a lot of relevance in intraday trading. Especially, see, when I say intraday trading, I'm particularly talking about the expiry trades.
Right.
Because after 12 o'clock, the Greeks don't come to your rescue.
Right.
Like you understand that, okay, if I'm shorting an OTM option, I have a lot of gamma risk. And if I'm shorting an ATM option, like I have a lot of delta risk. ठीक है? So मोटा मोटी आपको समझ आ जाता है कि and once you have traded a certain instrument, a certain style of trading for so long, you understand its behavior, right? You understand its behavior, and over on top of that, there is liquidity risk also.
Right.
So when it comes to trading options, especially in the current regime where the concentration risk is too high, instead of asking yourself like what is the vega risk, what is the gamma risk, you should be asking about what is the net tail risk.
Right.
Tail risk. So that is the question you should be asking, because a lot of people who trades these 920 straddle kind of a things, they were like thinking about a lot of strategy related risks. Oh, what if market moves V shape? What if market moves W shape and all that? Now all those risks are taken care of, and now certain set of other risks have started opening up. So the ultimate risk for an options trader is the tail risk. What happens in case of a tail event?
Right.
है ना, बाकी सारे risks you will be able to manage, especially if you are a decent enough trader, like who respects your risk reward, who respects your daily risk limit. There might be days where instead of you taking a 1% loss, you might end up taking 2 or 2.5% loss. And every trader inherently has signed up for this. Right? There are certain things which are outside our control. But what determines a trader's success is how he manages those tails. Right? And when I say manage those tails, I don't mean that, oh, आप 5% war पे trade करना है, because if you trade at such low wars, you won't be able to make any returns.
Return will be proportional.
Think of it this way, okay? Like whenever you lose your money, what is the time value of that money? For example, let's say like I'm making 8 to 10% per month, and I lose 20% in a worst case scenario, in a tail event. Now for me, that is 2 months of work, right? But let's say like I'm taking 5% war and I'm making only 1% return per month or 1.5% return per month. And on the day when that war hits, that equals to 3.5 or 4 months of return.
Understood.
Right? And at the same time, people always think of, they use these Excel sheets and they say that, oh, I can compound it at this rate. No, when it comes to derivative trading, you should not be like, perpetually compounding. You should not be perpetually compounding. You have to stop at one point and you have to start pulling out the money from the markets. That is the only way to take these kinds of risks.
Right.
The moment you start taking the risks on your compounded account size, then you're a ticking time bomb. Because जिस दिन जाएगा वो बड़ा पैसे पे जाएगा.
Understood.
है ना? The moment you start making money from the markets, pull some of it out.
Right.
Invest in other safe haven assets. And then you keep a certain amount of capital and it should act as your working capital.
Got it.
And working capital ka, I'd say that you should be willing to let go like 20-30% on any given day, and that is true across all the businesses. Right? तो किसी भी business में एक black swan event आता है, those people are willing to lose that 20-30%. Like, and trading is no different. Where trading makes a tremendous difference is people put their entire net worth and even more by borrowing into trading, and they take leverage which they don't know how to handle in case the leverage turns out against them, and they're not okay to take those kinds of risk, and they compound it.
Right.
People perpetually compound it, and after certain point you should stop there.
Right.
You should not be like perpetually compounding, and after certain point like you have to start pulling out, so that even if that 20% is lost, you will be able to replenish that account.
Definitely true. So I totally agree with you for the fact that so when we started, so we got most of our capital from outside, right? So again, it was a borrowed money, that too on leverage, right? So now the thing is, after 4-5 years of trading, right? So now you are at a stage that, okay, I don't need outside money anymore, because that has actually helped you build the capital. But here, again, as you said, the survivorship bias. So you should be really lucky at right point in time, right? So when we started taking, so we knew for a fact that, okay, in case if we lose, we can at least pay back. So then the amount became so much that, okay, we knew for a fact that, okay, now if we lose, we can't pay back, so we have to start taking lesser risk. And at one point you come to a place where, okay, now I think you can start trading yourself. Let's reduce the dependency on outside capital.
Correct. Actually, see, people kind of undermine the role of luck, na?
Yeah.
People who have read the Fooled by Randomness, they would understand, and they have a healthy respect towards luck, and they understand that, okay, I might be a little talented, I might be hardworking, but so are other people.
Right.
So are the majority of the population. But I have achieved, or I've been at a stage which like a lot of people can only imagine. It's because there is an element of luck in my favor.
100%, no doubt.
And also we need to understand that in a certain way, all successful people are a classic case of survivorship bias.
True.
Now the FedEx company that we look at, like
he
gambled his last $5,000 or something at the Vegas casino. And then, but let's say like, had he gone down, like had he lost that money, we would have not heard of FedEx.
True.
So all the success stories that get celebrated, we need to understand that, okay, along with the right decisions, those right decisions also happen to be at the right point of time.
Right.
है ना? And now the concoction of right decision at the right point of time at the right place,
right, is a
you can
factor
only
of
attribute it to luck.
Yeah.
You can only attribute it to luck, fate, whatever you call it, like ऊपर वाले का हाथ
Yeah.
वो भी. But the thing is, whatever you do, like do it at a rational level and don't lose more than what you can afford. If you can afford to lose 100% of your trading account, do it, man. Like I don't have any issues. Like there are people like let's say I become an option buyer. ठीक है? Like whatever net worth का, like I take like 5% and I gamble with it. ठीक है? 5 लाख रुपए का मैंने ऑप्शन बाइंग अकाउंट बनाया, उसमें मैं बोलूंगा कि चलो भाई जो होगा देखा जाएगा. And I don't mind losing that 100%. And now somebody comes and says, "Oh, you lost your entire trading account, bro." That trading account is just 2 or 3 or 1% of my net worth. I'm completely okay with it. And then there are certain people like who use 50 lakh account or a 1 crore account and they lose 20%. And now I get to know that that 1 crore is on a prop leverage or something.
Okay.
That is bad.
Yeah.
You should never be looking at the numbers in absolute terms, but it should always be looking at them in relative terms.
Right. So I have one last question before we move on to the next segment. So like there are 2 more segments. One is the quick rapid fire, and then I want to talk about taking trading as a career from your viewpoint, right? So my last question with regards to more serious question, right? So that would be with respect to your investments. So generally traders have a tendency to pledge their investment and trade on the margin, right? So I know for a fact that in option trading you want to generate or suck out every alpha possible, right? So do you try to do the same thing with respect to investments where you want to, let's say Nifty is compounding at 13%, so you want to explore mutual funds or you want to invest on your own where you can try to go to 18-19%. So how do you approach your investments?
See, honestly, I've not been so much into return maxing, especially on the investment front. Like whatever I do, like basically, I'm not a momentum trader. Like I don't, first of all, like I'm not a big fan of buying high and selling higher. Like I try to buy at discounts. So whenever, let's say like whenever a stock I like, or probably a stock which has corrected a little bit and now I know that okay, this is a good value proposition, I just go and put a certain amount of cap, like maximum like 1%.
So are you buying Kotak and HDFC now?
I've already bought and it's still at my buying price. So
still offering value.
It's still offering value, but we have lost a lot of time value.
Right,
so
true.
Once I know that okay, this particular stock or this particular security, this particular script has to perform in a certain way, but it hasn't, then it means that something has fundamentally changed. And I already have some investments there. Now, the time value of my investments is not appreciating. So I'd say that, okay, let me not commit further to this.
Right. So why I asked this is because I was more or less of the same approach a couple of years back. So during 17, 18, 19, so I like around 19, 20 and all, I read this book by Saurav Mukherjee and his classic stocks. Yeah, right. So
Asian Paints,
Bajaj Finance, HDFC, Kotak. Yeah, right. So I invested in all of that, and because they had a very successful track record of compounding also. Then I wait for 2, 3, 4 years, no returns on my portfolio. And then that's when I also started approaching momentum, right? So then, okay, I thought, for example, ITC, I had to wait 7 years for it to deliver 60% return. But I had to wait for 3 months for it to deliver 30% return once it broke the all-time high. So then, okay, I thought, okay, let me try to shift my approach. Maybe try to explore, not stick to the same thing and explore something else. So then I started shifting into futures. So that's why I just wanted to get your viewpoint on this.
Momentum is a proven edge in the market, correct? Like there are only two, there are very few edges in the market. One is like the VRP and the second is the momentum. Because they work based on the fundamental principles, right? So momentum is definitely an edge, but you have to understand that, okay, like whether does it suit my temperament of thing. And also, I know for a fact that like last year, like you made like big gains on some of your stock future trades. People understand only the returns, but they fail to see the associated risks also. Like you're very vocal about that, which is very nice of you because you're very transparent about the risks also. So you said that, okay, if the stocks didn't perform and if the stocks suddenly like, returned, then you'd have lost like 10, 20, 15%, 20-25% of your account, right?
Easily,
So you have to understand that risk is a function of, reward or return is a function of risk.
True.
The higher the risk you take, higher the reward. Now, if you are good at managing your risk, then you can get your Sharpe slightly higher,
Right.
like whatever, like the max return to max drawdown, whatever you call it, Calmar, whatever.
Right,
Like
right.
you try to maximize that.
So now let's try to lighten up the mood a little. So I will pull out my sheet so that I don't mess up my rapid fire, right? I will start asking some questions. So there are around 7 to 8 questions, right? So my first question would be, what do you think in today's world would be the ideal starting capital for trading?
As a full-time trader,
Yeah.
to live off of trading,
Huh.
probably I'd say like 40-50 lakhs.
50 lakhs. Okay. So would Praful recommend a college student to take up trading full time?
If he doesn't have his capital, no.
Okay. So
If he doesn't have his family support, like then no.
right. So that is quite important, to be honest. Right.
Because see, like when I conduct my mentorship programs, like there are a lot of these 21, 22-year-olds who are coming. So the first question my team or I ask them is, where are you getting the capital? Now, if somebody says that, oh, I'm going to borrow from my friend, and straight away, like, no, you're not allowed here. But if they say that, oh, my family has this business, like my family's net worth is this, so they can give like a few lakhs for me to, try and dabble in the markets, then yeah, like everywhere. See, let's say like if somebody is sending a kid to an MBA or this thing, so even trading is kind of a business, and even that kind of hones your skill.
Right.
It shapes you as a person in the long term. So that thing, like, I know this is a rapid fire question, but yeah, unless if you have a family support and if you have some expendable cash, then you can experiment with trading.
Do you think a trader's lifespan as a discretionary trader specifically is very short?
If you are trading high intensity, then probably yes. But if you are a discretionary trader, like who have a relaxed approach to trading, then probably you can do it for a long time.
So, what would be one advice for a person going through a drawdown except for reduce your position?
What would be one advice? Don't try to recover losses.
Okay.
Just like trade your natural game.
Right.
Okay, but reduce your position size. Understand that something is not working for you. So don't try to push it.
So, one index which is Praful Kulkarni's favorite.
For the last year, I think it's been Sensex just based on the returns, but Nifty has always been my favorite because for the kind of trading that I do, I want a little slow drifting and stable kind of an index.
Okay, the next one is one index you don't mind skipping.
Based on my last month's experience, mid-cap Nifty.
Right. So actually, in my case, I would totally agree with the same, because like somehow it's also, I think you would just feel, oh, you're just 25 points away, even though it feels the percentage risk is the same. It just feels that, okay.
See, the mid-cap Nifty mein kya ho raha hai? Like it either pins or it blasts. There is no in between. There is no in between. It either blasts or it pins. Like you have to bet on a fact that, bro, आज market pin होगा तो I'll sell an iron fly and leave it. तो अगर pin होता है तो that iron fly will give you like till its last paise it will give. है ना? Like it will exactly like it gets pinned at that exact point. Like the sellers will completely extract every single penny. And if it moves like that. Like the sellers will lose like 2-3 months of. So the best way to trade, if at all you want to trade expiries, is to trade with tighter spreads, is what I feel. Or if you don't want to give money and if you want to make money from VRP itself, then probably like you have to size your positions in such a way that you would not lose like more than 5-6% even in case of a tail event.
Right. So my next question would be, Praful, is let's say you want to change one thing in the market out of the things which have come up in the past few years. It can be leverage, it can be daily expiry trading. So what would be that one thing you want to roll back?
Bringing in a lot of expiries in correlated instruments.
Okay. So something like Fin Nifty, Bank Nifty.
Fin Nifty, Bank Nifty, Nifty Sensex. Right. So probably that could be rolled, and like we can bring in some VIX instruments,
I think volatility
instruments, yeah, something like that.
Right. So that almost wraps up our rapid fire, and now I will go on to some questions regarding trading as a career, because I know that you have come from a government job, so this thing, right, public sector job, right into trading, right? So let's say let me put this back, or maybe I might have to refer it later on so that I don't mess up the questions, right? So now when you were making this transition, right? So what were the factors you considered? So today, let's say a person who is having a pretty decent salary, he wants to quit the job and start taking up trading full time, right? So what do you think are ideal factors that he has to consider before he takes up this decision?
See, first thing is like you have to be hopeful, you have to be optimistic, and at the same time, like you have to be rational. So you have to be a rational optimist, right? You need to understand that, oh, I'm going to put all my efforts, but at the same time, you should be okay to handle the worst case scenario. In my case, I had a decent amount of savings, I had no debt, I had no, I had practically zero burn at that point. Like I didn't have to, pay any EMIs, or like I didn't have to worry too much about, okay, like how do I pay my bills or something like that. And I had my 3-4 years of expenses sorted. So I was like, bhai, 2-3 साल try करेंगे, अगर कुछ भी नहीं हुआ तो भी like, and at the same time, if you have a historical record of you doing well in other aspects of life, that itself is a good boost. So let's say like you have been an academic success all through your life, like you have cleared like your medical prelims, and you have cleared your engineering prelims, you have come out from a decent college, like you have cleared IIMs, and you have got few MBA admits. So that kind of gives a confidence that भाई अगर गलत भी हुआ तो वापस क्या करना है, वापस MBA करना है, जॉब जाना है. So the worst case scenario itself was the status quo.
Understood.
है ना? So that kind of gave me the confidence to हाँ 2 साल तो है, try करते हैं. And then see, if you don't have the luxury to experiment, what is the use of all the materialistic things that you keep accumulating? So the thing is, like, we accumulate money or we accumulate power only to play the games which kind of scare you, so that you kind of overcome those fears or overcome those. Basically, you want to play it at a next level. It might be next level from the societal point of view, or it might be something different in your own life.
Right.
So trading was something different for me, and I took that thing, but it was not like a it was not like a gamble. It was like a calculated bet. So I had plans कि success हुआ तो कैसे कैसे compound करना है, fail हुआ तो इसको exit plan क्या है.
Right.
So have those exit plans.
So I think what you said really makes sense, because in my case I approached it little differently. So I was like, first 2 years I will try. If I fail, then I'll go to a job. Right.
So again, there are other factors also to consider, right? Like you were coming out right off the college, so you were like 19, 20, and you had family support and all that. In my case, like I didn't have my dad had passed away, right? So I had to take care of that aspect also. So there are everybody's situation is different. Like you have to custom fit your approach, and you have to tailor make your approach towards your situation in life. So I wouldn't say something is right or wrong, because there is nothing textbook right or wrong. If you look at a lot of these models and actors with practically zero money moving into Mumbai, sharing flats with like 10 other people. Now if they become successful, we celebrate them. If we don't become successful, like उनके घर पे गालियाँ पड़ते रहेंगे, and probably their parents would have disowned them.
True.
There is both ends of the story. Like you'll understand whether the decision is right or wrong only from the hindsight. You can only take a rational, logical decision based on the data points that you have at that particular point of time.
True. Actually, that also brings me to a point that, so I already asked you this, would you recommend a college student to take up trading? Right. So why I asked this is because I will tell you a story. So when we were in college, right? So we actually went and approached a trader. So he's a pretty big guy, right? So through some reference, we got to speak to him, right? So while we were speaking to him, so he has a pretty chill life. He traded during 1990s, 2000, and now he's chilling, investing, right? So once the thing is, when we asked advice for him, so his first thing was, why do you want to get into this? Don't even trade, right? So the thing is, that time I was thinking he must be such a hypocrite, because he himself has traded, he himself has made money, and now he is advising us not to trade, right? So today, if somebody comes and asks me the same question, right, say a college guy, right, I would give him the same advice. Don't come into trading. Why do you want to take this headache, right? So because the factor of luck is very important, as we already discussed, and also the chances of success is so low. Right. So that is why I just brought up this topic again, like with respect to the what factors like really matter. So that I think you have very well answered. So one is maybe the dependency on other outside things, and also how well are you, how sustainable are you
Correct.
without external money coming in, right?
And also, like when people say that don't come to trading, and it's, see, every profession has its pros and cons. Like trading is just like any other business, correct? Now there are certain like proper top entrepreneurs who say that, bro, like you don't need, this entrepreneurship, because this is like grinding for the rest of your life, like 40 for the next 30-40 years, like you have like 60-year work weeks. Now everybody's outlook on life is different, right? Everyone's priorities is different. Now you can have a proper hippie lifestyle where you don't need any materialistic possessions and you just are focused on experience, or like you want to have this proper Asian mindset where like you're so focused on acquiring material wealth, acquiring status, acquiring, like moving up the ladder. So everybody's built different, man, because there are some of my own friends like who want to make it to the top of the corporate ladder, and there are some of my friends like who don't give a shit, like who are still working in menial jobs and who are like very happy. And if I consider like how happy both these guys are, like the guy who's having a menial job, like who doesn't have who doesn't base his self-worth off of his material achievements, he's more happy and content than this guy.
Understood.
So if you look at any successful guy like who has acquired a particular amount of materialistic success, he'd always go back to doing something which gives him joy.
Right.
Which gives him joy. So there is no hard and fast rule ki you have to behave a certain way, you have to have certain aspirations. Like sabka alag alag hai.
So this also brings me on to the next question, Praful, right? So the thing is, there is all this buzz in the social media. Okay, traders' income is more from other sources than this, right? So like I was also, okay, maybe if you asked me a couple of years back, right? So I was also a believer of this. Okay, traders should only earn from trading. Trader should only earn from trading. So then when you look around, right? So a doctor wants to trade. So doctor is earning from being a practitioner, plus he wants to trade and earn. He wants to invest and earn. He wants to do real estate and earn. Engineer wants to do everything and earn. So then it came to a point, okay, why should the trader only earn from trading? That is one, this thing, right? So this didn't really hit me till the fact that so our whole organization was running only on the trading income and things were going fine till the point where we started to come into a drawdown, right? So this is when the real cash crunch happens, because you have salary commitments, you have fixed commitments to do, right? So then you realize, okay, secondary source of income is required, right? But the thing is, we still don't have. We are trying to build one. We are trying to see what we can monetize and how we can bring, right? So according to you, right? So how important? Because I am talking to you from a different perspective. Think like, since we have people employed and all of that, so we have fixed commitments, right? So as an individual trader, how important do you think, maybe from a financial standpoint, from mindset standpoint, to have a secondary source of income?
See, as I said, trading is a luxury. You'll only have luxury if your needs are met. The hierarchy hai, needs, comfort, luxury. So your needs should be met. Now, if you're struggling, I mean, I wouldn't say struggling, but it's imperative to have multiple streams of income, especially if you're running a business. And buzz jo create karte hai social media pe, and those guys, they are not competent traders, but they want to just sell dreams and hopes and wo karte hai, and they are making major money from predominantly that. And people like who are traders, like usually they are like little sensitive, like who are actually making money from trading, they are sensitive, and we don't want to go through the whole point of judgment and them putting us in the basket of those guys who are selling dreams. But I would say that being thick-skinned, a little thick-skinned is also a skill in itself, because हम लोग मतलब judgment को डर के ना, we are not venturing into teaching or like, because I feel that there are a lot of people who could use inputs from actual profitable traders, but एक्चुअल प्रोफिटेबल ट्रेडर्स को क्या है, हाँ यार मेरा तो यहाँ से तो मेरा इनकम आ रहा है, ठीक है, मैं एक्स्ट्रा कमाने के लिए जजमेंट के थ्रू मेरे को क्यों जाना है?
वेरी ट्रू, आई एग्री विद दैट,
है ना? तो दे आर कंटेंट, It's not like they are having, like tough time, paying their bills. They are making their own different amount of money. They have like other avenues, but they are not venturing into trading. I mean, they are not venturing into teaching because of the judgment that the general society is trying to place. Oh, they are trainers and they are not trainers. So the first thing is, like, if you're making money from trading, it serves as a measure or a metric of competence. You are competent enough to make money from the markets, and if you are willing to teach, and see, I'll tell you, if somebody is trying to teach you strategy, run away from him.
Right.
If somebody is trying to teach you the framework, the approach, like how it is done as a business, then probably you have to learn from those guys. And to answer your question short, there is absolutely nothing wrong as long as you're not selling dreams. Tell the reality. Tell them, see, this is the best possible scenario, this is the neutral scenario, this is the worst possible scenario. And you should also tell them that in spite of attending your mentorship or your workshop or your webinar, there is a high chance that you won't be successful. It's like saying that, bro, like, I've joined this UPSC coaching institute in Delhi, Rajendra Nagar पे मेरा UPSC coaching चल रहा है, and this coaching institute is so good, like यहाँ पे जो पढ़ाने वाला है वो बंदा भी UPSC crack करके आया है. That doesn't mean that all the 100 students in that class would crack UPSC.
Right.
रेस में 100 लोग दौड़े, 1000 लोग दौड़े, the winner will be 2 or 3. I'd give you this example. Okay, let's say there's a race. There are 10 people. Nobody trained. Only one person trained, and he won. Now all the 10 people, they understood that, oh, we should also train. This guy also trained, those guys also trained. What happened is, even after that, still there will only be one person can win. Now they say that, oh fuck dude, like I think we need to try something different. Like let's go for, these steroids or like performance enhancing drugs. All the 10 people took performance enhancing drugs. Now, instead of that 100-meter race getting completed in 10 seconds, now it gets completed in 9 seconds. But even after that, only one person will be the winner. The markets might get difficult and difficult and difficult because more and more aware participants, more and more people with knowledge would come into the market. So that kind of slowly takes the edge away. Now you have to adapt.
Right.
As long as you're giving the realistic picture and you're providing a service, there is absolutely nothing wrong in having another stream of income. But social media पे कैसा है, especially Instagram, TikTok पे क्या चल रहा है? Like people are just selling dreams and they're just selling bullshit. So
I totally agree because, for example, let's say previously this month itself, right? So I had 2 future positions and both actually went really well, right? But unfortunately I couldn't hold because the market reversed. So one was Polycab, which almost went up 10% yesterday. I held it almost like till the end, right? So I had this position for almost 12 days, right? Insane quantity of futures, right? And because on Thursday the market started looking weak, right, and Polycab also fell, I knew for a fact that Friday is the result. Maybe I could have given a try, but my fear was, okay, market is so weak, we have already fallen 1.5% in spite of global cues being positive, right? So I had to book a loss. So I booked a loss overall with futures itself. So again, usually I trade futures only on a 50 lakh account. The reason is I don't blow up more than 50 lakhs. So, right? So in the worst case, so it would be more or less like each trade I will have a max VAR of 20%, right? So 2 trades put together, I hit 12 lakh, right? So which is well over 20%, right? So the thing is, if this 12 lakh, if I had maybe 12 lakh coming from another stable source of income, right? So I would also increase my risk exposure. So I would be like, okay, I can maybe continue holding it for one day because there is a higher chance after result it might have gone up. So I feel your risk appetite also like significantly goes up with having maybe another source of income. So what would be your take?
The risk appetite is mostly a personality trait, I'd say. Okay? Let's say you give a conservative guy 100 crores, so banda 100 crores ko FD mein rakh ke baithega. But like you give like only 1 lakh to a guy like who has a risky tendency, so he'll take those risks. So risk profile is pretty personal, I'd say. And of course, like see, you having a stable income from the other source will give you some sort of a mental peace. Right. I wouldn't say ki, dekho, simple cheez hai. Let's say like you had another 10 or 15 lakh rupees per month additional source of income. Now, Saket would put in a futures trade. Somebody else would go and buy a car. Everybody has their own way of spending that money. Like your trying to risk that money for an additional gain. But somebody would have, said that, okay, like, इतना तो risk करने के लिए इतना ही है, ये बाकी जो पैसे आ रहा है मैं घर लेके जाऊंगा. So, I wouldn't say that, oh, like by getting a secondary source of income, you'd be prone to take like higher risks and all that. That is again personality dependent. For example, if I had another stable source of income and I want to take those trades, I wouldn't be going overboard just because like I have another source of income. Like my risk appetite would be constant whether I have another source of income or not.
Right.
So it's pretty individualistic, I say.
Right. So my next question to you, Praful, would be more or less on the lines of social media, right? So the thing is, one is you have to keep yourself away from the social media noise, like not just with respect to judgment, but also let's say you have a bad day, you go to social media and you see others are having a great day, right? So knowingly or unknowingly it will have some effect on you, right? So at least for most of the traders, you will be like, okay, like all of them made profit, so what did I do wrong that today I ended up in this position? But matter of fact, it's just a game of chance. Today you might have made, tomorrow somebody else will make, right? So one is how important do you think social media is in the first place, right? So just from like leave from the brand perspective and all of that, right? So as a personality, how important is it to involve yourself in social media? And do you think so any things coming out on the internet is going to affect you in any way in the longer run? So let's say it is going to make you change your decisions on particular thing or change your way in a particular way.
See, whether you are getting affected by something external, again depends on you as a person. Correct? Let's say someone might get affected by a social media screenshot, someone might get affected by the friend next door who's trading. तो वो बंदे के पास शायद ट्विटर ना होगा, यूट्यूब भी ना होगा, but just because like one of his friends was doing that, he might do it. So if you are a person who can be easily coerced, you will be coerced in the life because we all interact with the external world through some or the other format, correct? So I'd say that the better thing to do is to try and protect yourself from being affected rather than completely shutting social media off, because social media has its own pros, right? Like let's say especially for someone like you and I who are building in public, it is imperative that we put 100% transparency across the platform, and we are trying to do the right thing. Yes, we are trying to show that good days, bad days, they're all part of the game. It's a business and businesses have ups and downs. Now, if you're the person like who's getting affected because you had a bad day and the other person has had a good day, then you are not mature enough to be trading, I'd say. Because once you understand trading in its truest sense, you understand that, okay, fine, like there are a lot of things that go in determining whether you come out in profit or in loss. So he might have gotten lucky, or you might have gotten unlucky, or you might have committed some unforced errors, and the only thing that you should be looking at it is, okay, how can I improve? Either that, or you just have to shrug off. Either you have to say that, bhai, losses are part of the game, this loss is well within my control, just another day, I'll come back tomorrow and I'll trade the normal day. Don't even get bothered. Go out, have fun, like go for dinner, like just chill. Or try to introspect if you had actually committed a mistake. Like if you're a discretionary trader, every P&L point gives you some sort of an indication of how that profit has or loss has come. Whether that loss has come because of the market moves or whether you made certain unforced errors. If there are certain unforced errors, most of those unforced errors are probably personality based, trait based. So then you have to start looking at, okay, this error or this particular unforced error is repeating on probably a weekly basis or a monthly basis. I see myself doing this same error over and over again. So what is triggering this error? Then probably there is some sort of a self-introspection that is required. But if you say that, it is just market. Because there are days where I have been super hard on myself, even when I have made profits, and there are days where I was like completely chilled. I don't even think about my losses, even on the days which I have taken like some of the bad losses, did 1.5-2% losses, जिस दिन दिया है ना, उस दिन like I was very chilled. But on days where I have made like 0.5% profits also, I was like, fuck, like I made a mistake here.
Right, I think that happens very often because, like even with me, right? So there will be days where you are actually booking a loss, but you know that from your end you did everything right,
Correct.
but somehow you weren't rewarded.
Yes.
You don't feel bad. But some days when you miss out on opportunities where you knew that you could have captured, but you miss it out just by not overlooking, but your judgment of things, right? So
This comes only after certain amount of trading, right? Like you'll start understand what is a random event in the market and what is an unforced error from your side. Once you are able to segregate those two things, then you'll be able to pinpoint and say that, oh, ये loss मेरी mistake की वजह से आया है, ये loss market ने दिया है.
Right.
Be very happy to take a loss given by the market and be very strict about the losses which are the outcome of your mistakes.
Understand. Yeah, that's a fantastic point, right? And which makes a lot of sense also, right? So one thing, like what I want to know from you is, I know you're a fitness freak, right? So the thing is, okay, apart from gym, which you obviously would be going regularly, right? So there is a lot of mental stress. There is no second thought about it as a trader, right? So what are the things that you would do or you would recommend a trader to bring some mental peace? Like, so stress mostly comes not during the phase of performance, because phase of, let's say you're performing very well, right? So you finished the market at 3:30, you're very happy, adrenaline rush will be there, you have ended with a profit. But this phase usually comes, let's say you're not going through a great time in trading. So what is that maybe Praful would have done or Praful would do?
See, I think like I've not reached that place where I'll be able to advise others on how to do on the bad days. Okay? Because like even I'm pretty hard on myself like on bad days, especially when I've committed mistakes, because like that day like I don't hit my gym, like I don't I sleep little late, I binge play chess,
Okay.
because it's like it's some sort of a revenge that I want to take on myself. It's kind of a self-sabotage. So that's why like I wouldn't want to give any advice to others, because I'm also in the path of handling myself better on bad days. So I have certain plans, but most of these behaviors, they are coming out of your psychology. So it's very hard for you to change it over a course of a week or a month. So it takes a lot of time. So I've been trying to do that. So it's like doesn't matter. Like I've been trying to distance myself and separate myself from the outcome as much as possible. But you're human, and especially as a discretionary trader, so you have that baggage of those MTM fluctuations throughout the day with you. So it's very hard for you to just completely separate yourself from the PNL. But I've been trying to do that, but I wouldn't say I've been successful in that. But everyone has their own ways of coping, right? Like probably like you'd figure out. Like with time, everyone would figure out, man. Like I don't think what works for me might not work for others.
True. So yeah, with this, I think one last question which I would want to know your viewpoint from, right? So do you think, Praful, like with all the current given scenarios, right? So in this question has two parts. So one, discretionary trading would slowly start coming down, because I feel the pressure is much more higher, because you would be blaming yourself for the execution, right? So slowly start coming down with the recent events, what I'm telling, with the spikes and all of that. The second one, with let's say the machine learning, like AI, all of this coming. So there are two sets of thoughts. So one is markets are driven by human emotion. So very unlikely that any machine learning data could really foresee it and take it. The second set of thought is, okay, it's anyways, even human emotion is end of the day, it will be giving out some data, and also for the fact that the entire market data is available and the analysis can be done much better, right? So do you think a significant alpha exists? So I'm not talking about TBS, right? So keeping TBS completely away. A significant alpha exists with a total, let's say with AI ML coming in, and let's say you move into a complete automation.
See, let's say like I don't want to give a definitive answer here, because like everything is very transient as of now. So let's say like I give you an AI model, and I'd attach a certain amount of success rate to it, and I'd say that, Saket, like this model is yours. So this is a bot, this is an AI model which takes its own trades, which takes its own decisions. Now Saket has got 100 crores. Now, how much Saket is willing to put on that bot is again a human discretion. है ना? Now, that human discretion is based on your confidence of that bot. Right? In the end, there is always a requirement of a certain human at the trading floor. For example, let's say like I have certain algos. Let's say like I run algos as well, right? So let's say like I have 5 systems. Now, depending upon the market regime, like I take a discretionary decision to allot how much cap to a particular system. That is again a discretionary system. As in silos, that strategy is making me money.
Right.
But as the overall book, it's always, I think, the human like who has a discretionary element attached to his decision making.
So my next question would be like little far-fetched into the future with respect to how trading can evolve, because we have seen how broking systems have evolved from maybe 1980s, 1990s, from hand jabbing to today totally automated, totally at server level. Right? Even for example, even if you go back in time, right, in finance, so money lending. So where you would have local lenders almost everywhere out there, and now you have regulated banking. Right. So do you think it's maybe over the course of time, so again it would be, even though it's a discretionary decision, maybe over the course of time, so the entire trading system, or what I would say people's participation in the market would be more organized than like traders popping up, putting their money, trying discretionally?
See, you need to understand the macro structure of human emotions here. Because not everybody comes to the markets to make money. You know, this might seem a little counterintuitive, but not everyone comes here to make money. They think that they are here to make money, but they are here for something else. They are here to quench their intellectual thirst. They are here to feel good about themselves by calling the market directions right. Some are here because they are in the process of self-sabotage. Unknowingly, they are self-sabotaging. So, not everybody is here to make money. So, there are people, look at this. Is this a privileged knowledge that casinos always have an edge over gamblers? No, right?
Everybody
knows.
Knowledge, yeah.
Do you think the Vegas is making a loss? No. Do you think Goa casinos are making a loss? No.
Definitely.
Everybody knows, but everybody has a different. Somebody has. I think it's. Who's this guy like trading in the zone? Mark Douglas. Mark Douglas has seen it. Market will give you exactly what you seek from it. If you're seeking money, market has a way to give you money. If you're seeking thrill, market has a way to give you thrill. If you're seeking self-sabotage, market has a way to give you self-sabotage. So, in the end, it's how I look at markets is it's also kind of a place of expression. You go and express yourself. Like you want thrill, like you go there. Like you want adrenaline rush, you go there. Like you want self-sabotage, you go there. Like you want to prove your worth to someone, you go there. You want to make money, you go there. So I'd say that a lot of volumes that are going to come in the future might be coming from organized trading models. But at the same time, I don't think there would be dearth of impulsive traders coming and putting in the money. At this point, I don't think I have the knowledge to comment on what is going to happen like 5 years down the line, because 5 years is also like too far ahead in this kind of technological progress. The rate at which the technology is progressing, we can't even say like what's going to happen in the next year. So, as someone like who knows a bit about human emotions, so human psychology, we know that everybody knows that like Dream 11 is a losing proposition. Every day, like so many people play Dream 11 and play Rummy Circle and play everything. It's just that like hope is something which drives people. And like they think that they are special.
And also
I am trading because I feel that like I am a special trader compared to all the all the fucking Harvard, Stanford graduates around. Because not everybody has a great self-awareness, right? Even someone like who comes with the 10,000 rupees, who's driving auto, he thinks that he is able to predict Nifty like where it's gonna go and he's gonna buy puts or calls. He's doing it because he has that confidence. And if he's right, it kind of reaffirms his confidence. If he fails, either he loses his confidence, or he goes into a revenge mode.
Yeah.
In both the cases, he'll again come back to the markets and trade.
Right.
So it's more about that. I don't think the uninformed and the impulsive flows would ever reduce into the markets, because there is nothing deterministic about markets, right? Like if you make this a deterministic place, then there is no point of risk and risk management and all different instruments. So it cannot be deterministic.
Right. So adding to your point, right? So like how you said about an auto driver, like getting reaffirmed with his right view. So I was reading this somewhere, I don't remember which book, right? So what usually ends up happening is, let's say you go right, so you're quite happy. So if you go wrong, let's say you would have learned something and you would have come to the game, right? So somewhere, so this happens psychologically where you feel, okay, you must know more to make profit regularly, right? So even though it's a random game of luck, right? So today you might lose, today you might make, right? So again, this person who is going to be there, so that's how they say mostly all the like trading courses and all sell, because he wants to go back and try to learn something more, learn something again and come back. And again, when he makes a loss for maybe 3-4 days continuously, he will again go into that loop of, okay, I need to know more to make more money. So
they should understand that there is only a certain degree of accuracy with which I can, call the direction of the market or whatever, like call the bets on the market, but it has more to do with my own behavior. So at certain point in a trader's journey, he stops looking outwards and he has to start looking inwards.
Right.
So that is the point where, the trader starts to understand, okay, the input for my trading success is not just from the markets, it's from my behavioral aspects as well. But a lot of people spend too much of their time, money and efforts in this loop. They believe that like I want to learn more to make more, so they never see the other end of the or the other part of the learning curve. So the best way to do or go about learning something is learn from a practitioner rather than a preacher. Understand a trader has a very how do I put it, like he would not come and flaunt his riches to lure you into his courses. Right. Okay? So first try to figure out like who is a guy like who's actually a competent trader, and who do you think is a guy like from whom you can learn something meaningful. And from there you have to say that, okay, I have learned a certain amount of things, because you don't have to learn everything that is there to learn about the markets, correct? Like even some of the top hedge fund markets, they don't understand like how everything works. Somebody might be like good at equity, somebody might be good at derivatives, somebody might be good at money markets like bonds, how the bonds work, somebody is good at forex. Nobody understands. So you need to fixate on your realm, your area of play, and then you need to understand that, okay, I think this is sufficient. From here on I should stop looking outwards and stop looking inwards.
Which makes a lot of sense again. I think we have had a fantastic conversation today, covering from trading approach, risk in trading, all the way to maybe career at trading as a career to multiple stuff, right? So I had a fantastic time, Praful, like chatting with you, understanding your perspective about things, right? So I have a small token of appreciation for you for making it all the way.
Okay.
So this is from our side, and yeah.
Thanks, Saket. Thank you.
Thank you so much for making it here, and appreciate it.